Next up, we have New World Resources. They're exploring and developing the Antler Copper Zinc project in Arizona, USA. Now, ladies and gentlemen, this is one of the highest grade underdeveloped copper projects, deposits in the world, I should say, on a copper equivalent basis. So they've got mining studies underway. Here to tell us the story, please welcome Managing Director Mike Haynes. And just by the way, the ASX code is NWCs. Take it away, Mike.
Thanks very much, Kerry. Thanks very much, Reed Corporate, for putting on this conference. It's great to be here, and thank you all for your attendance here today. It's great to be talking in person, and I'd really welcome the opportunity to talk to you one-to-one in our booth, because I think I can cover a lot more material in that time than we can in the 15 minutes here. But as Kerry said, New World Resources is focused on bringing the Antler copper deposit, which is located up in northern Arizona, back into production. Antler was last mined in 1970, and it is the highest grade undeveloped copper deposit on the ASX. There is one slightly higher grade copper deposit on the ASX, and we've heard from Sandfire earlier today, and that is the DeGrussa deposit. But we are slightly lower grade than that. We are a very high grade development proposition at a time when the copper price outlook is extremely favourable. And we are located in a fantastic jurisdiction. This photo that is up on this slide illustrates where we are. We are sparsely populated northern Arizona. We're 750 metres from mains power, 15 kilometres from an interstate highway, 15 kilometres from a transcontinental railway, and that's really going to help us bring this project into production in the near term for very modest capex. In terms of where we are in development of the project, we acquired the asset in March 2020. 2 weeks later, we commenced drilling, and we have not stopped. We've now drilled over 108 holes for more than 42,000 metres. About 6 months ago, we ruled the line in the sand because we believe we're approaching, if not we are at the position where we have a critical mass to mine, and we are in the putting the finishing touches on a mining study with the results of which will be announced in the coming weeks. But we continue to drill, and we continue to find more and more mineralisation, so we continue to expand the resource, and it continues to be extremely thick and extremely high-grade mineralisation as we go deeper and deeper in the system. And so we will expand on that mining proposition, but we believe that we have two objectives, and we believe there are two best ways to realise value for the company, and that is to continue to expand the resource base while we take the deposit into production. This all came about 2.5 years ago. The Board of New World Resources deliberately took a position on the copper price back in 2019. We anticipated that the copper price would rise because there is an impending shortfall in supply. And indeed, this chart here illustrates a forecast out to 2030 of a copper supply deficit of around about 6 million tonnes per year. That's on current consumption of around 23, 24 million tonnes per year. So around about 25% of what's currently being consumed being in shortfall. That bodes extremely well for the copper price, and we are starting to see that materialise. So in March 2020, we acquired the rights to the Antler deposit. We started drilling. We put together a resource in November 2021. We're almost completed a mining study. And the two big value drivers, as I mentioned, continue to be to continue to expand the resource base and to get this project into production, with production targeted in 2025. Now that also coincides with a period where Goldman Sachs is forecasting $12,000 to $15,000 per tonne copper. Potentially higher. There was some commentary even a week ago from Goldman Sachs indicating that the copper price may be much, much higher than that because of this supply shortfall. Now, in our case, because we've got an exceptionally high-grade deposit, the project is not particularly sensitive to copper price. But if we can be in production with a very high copper price, we will be producing at reasonably modest costs in a high copper price environment with extremely robust margins, and that will be a highly profitable operation. So we are targeting this production to capitalise on the high copper price environment. With respect to the asset, we're located in one of the world's best jurisdictions for developing a copper deposit. We're up in northern Arizona. 70% of the US's copper is produced in Arizona. It is a pro-mining jurisdiction. Where we are, we're 2 hours to the south of Las Vegas, and we're 3 hours to the northwest of Phoenix. Very, very accessible, with an interstate highway 15 kilometres away, transcontinental rail 15 kilometres away, a workforce of 30,000 people in the town of Kingman, located 40 kilometres away, and mains power to within 750 metres of the old deposit. Extremely good jurisdiction. What had been done previously? The mine previously produced around 70,000 tonnes of ore. Very modest production, but extremely high grade. Around about 5% copper equivalent. So just under 3% copper and almost 6% zinc. Only 70,000 tonnes of historic production, but the deposit, when we acquired it in 2020, the deposit was known to extend down to 550 vertical metres underneath the historic headframe, even though all previous mining was within 150 metres of surface. So New World set about exploring. And the easiest place for us to explore initially was directly underneath the historic stopes. And the historic stopes, we are now looking at long section here. The deposit dips at about 60 degrees to the west, and we're now looking side on. The historic stopes are illustrated in the upper levels of this long section in grey. So there's around about 70,000 tonnes of historic production has been mined out in the upper levels, most of which is within 100 metres of surface. But in March 2020, we started drilling underneath those historic stopes. And we continue to drill underneath those historic stopes. We drill deeper and deeper, and as we drill deeper and deeper, we find more and more ore, and the ore continues to be extremely high grade. As I say, we've now completed around about 42,000 metres of drilling, and through that work, we are confident we've delineated at least 2 and possibly 3 thicker high-grade shoots of mineralisation. To date, we've only drilled over 500 metres of strike. We're now down to over 700 vertical metres. The mineralisation keeps going, but over that entire 500 metres of strike, 96% of the holes have intersected high-grade massive sulphide mineralisation, an extremely high strike rate. And as we go deeper and deeper, we continue to find more. But what we are finding is underneath the historic workings, there is a thicker zone of mineralisation, and this is extremely thick and extremely high grade. So the long section here, the colours are denoting a copper equivalent times metre thickness, grade thickness interval. So in yellow is greater than 10 copper percent metres. So you can think about, from a mining proposition, say 5 metres at 2% copper or 2 metres at 5%. Very, very mineable grades for an underground mining operation. But then as we go into the red zones, we're looking at greater than 40 copper percent metres, and the magenta greater than 60 copper percent metres. For example, 10 metres at 6% copper equivalent, or 15 metres at 4% copper equivalent, or 20 metres at 3% copper equivalent, or greater than those. And what we see in these magenta zones is an extremely consistent zone, coherent both on a grade and on a thickness basis, a coherent zone of extremely thick, extremely high-grade mineralisation that is being delineated on holes that are 60 to 70 to 80 metres apart. We aren't having one successful hole drilling 5 metres next to it and having another successful hole. We are drilling and we're stepping out 60 to 80 metres. Indeed, now our step outs are up to 100 to 120 metres. As we look to rapidly expand the resource base, we are having meaningful step outs here that are having a critical impact on expanding the resource base. So we've defined the main chute to a reasonable degree of confidence. We subsequently turned our attention to further south, and we've delineated what we're confident is the south chute. and potentially a third chute at the southern end or the right-hand end of this long section. But come October last year, we believed that we're approaching having a critical mass to mine. So our target production rate is around about 1 million tonnes per annum. And we felt that we were approaching having a critical mass that would justify a standalone processing facility. We've continued to explore. So we continue to explore with 3 rigs drilling 24 hours a day, 7 days a week. But in November last year, we declared a maiden resource for the project. It's an interim resource, but that resource is 7.7 million tonnes at 3.9% copper equivalent on a metallurgically recovered basis, or 4.6% copper equivalent if we factor in all the value of all the metals in that formula. A critical mass to develop a mining operation. But we continue to explore. So our 2 value drivers in the near term are to continue to grow the resource, to make that bigger and bigger, to expand it beyond the 7.7 million tonnes, but also to complete a mining study, to get mine permits underway so that we can be in production as quickly as practicable, which we're targeting in 2025. If I can just touch on the exploration that we've been doing since declaring the maiden resource. In the black text box there, with the red text, we can see the deepest hole. I think there's a black arrow pointing to it. The deepest hole for which we had assays when we declared the maiden resource back in November. Subsequently, we've continued to drill deeper and deeper. And in the purple polygon there, or the purple rectangle, we see a series of 8 or 10 holes that have intersected mineralisation deeper than was known at the time that we declared the resource, including the best hole yet reported from the project, where we intersected 42 metres of mineralisation at almost 4% copper equivalent, in the 4th deepest hole that we've drilled on the project. And we've continued to drill deeper and deeper, and within this main chute, we consistently return exceedingly thick, exceedingly high-grade mineralisation, including the deepest hole for which we've yet declared assays, 700 metres below surface, which has intersected 10 metres at over 6% copper equivalent. So this deposit has not stopped. The resource is purely constrained by lack of drilling, but we continue to drill with 3 rigs, all targeting the depth extension of the deposit. So without doubt, the resource is growing, and indeed our target is to expand the resource to 10 to 12 million tonnes this calendar year, and I think we're on a very strong track to do so. There's not just potential in the in the main chute. The deepest drilling in the south chute, we see some phenomenal intercepts, even higher grade mineralisation, very, very good thicknesses of mineralisation. So that mineralisation remains open at depth, and we continue to drill the down dip extension of that. And indeed, there's possibly a third chute developing at the southern end, and we continue to drill test the southern end at that. Concurrent with that exploration work, for the last 6 months, we've had a mining study in progress. We are anticipating mining around about 1 million tonnes per annum, which would see us produce around about 25 to 30,000 tonnes of copper equivalent metal per year. Because of the very high grades here, we don't need to move much ore. It will be an underground only operation, moving around about 1 million tonnes, but about half of that, maybe as much as 60%, will be returned back underground by way of paste fill. So it will have a very small surface impact. Equally, because we won't be moving many tonnes, we will have a relatively modest capex, but because of the grade, we will have high margins. And if we can have high margins when we're capitalising on the prevailing copper price, even today, $9,750 a tonne, it would be an extremely high margin proposition. But at $12,000 to $15,000 a tonne, as Goldman is forecasting, it will be even more profitable. It will also have a very small surface impact. Underground only, returning the 50 to 60% of the waste product back underground, utilising existing infrastructure. We don't need to build new roads. We don't need new power lines. Indeed, with power, we will upgrade the existing power line that comes to within 750 metres of the project. That will come at a modest capex of about $3.5 million. And the power that will come down that line is 5.5 cents a kilowatt hour, exceedingly cheap power, which adds to the profitability of the project. But equally, we're not going to have an open pit, we're not going to have a big tailings dam, so it will be very, very small surface disturbance, very low environmental impact. So, to wrap it up, New World has the highest grade undeveloped copper deposit on the ASX. We have a critical mass that we are taking to production, with production targeted in 2025. It will be modest capex, it will be high margin, and it will be very small surface impact, low environmental impact, and minimal social impact. Thank you.
Thanks, Mike.